What's going on, everyone? Mic check, 1 2 1 2. This is Jordan with Conquer Trading and Investing, getting ready here for our live stream this morning. Looking forward to sharing this time together with you all. Boom, boom, boom. There we go, and we're live. Yeah, you know what? I miss and love Honeymoon also. Honeymoon's fantastic. We've had many honeymoons throughout this year, honeymoon mornings throughout this year, even when price has been, let's say, crashing, because trading both sides of the market, we've been able to capitalize on that. And even though price was coming off, we were still able to be accumulating Bitcoin. And in fact, those were honeymoon mornings, right? And we'll have many more honeymoon mornings. Right now, though, markets are kind of a little bit flat this morning after the PMI numbers out of the Eurozone, which actually German manufacturing, it's the first time I'm looking at the numbers this morning, were higher than estimates. And then you saw flash manufacturing out of the UK getting obliterated. So that's interesting. I guess that's going to have the euro doing about nothing this morning on this mixed data. I think a lot of people are looking at this coming winter, and if you had a large amount of capital that you wanted to focus inside the public markets, would you be looking to go ahead and, if you're looking to, let's say, attack on the downside, would that be in the United States or would that be in Europe? Right? A lot of people in the US seem to be a little bit US centric, right or wrong. It's just the way it is. I remember growing up, there used to be the New Yorker, and on the cover, they would have like New York was the center of the universe. And then as they look out even across America, they would be like you'd see California in the difference, the way that a New Yorker views the world. It's similar to how perhaps someone from the States views the world, but it's not how the world works. I know that today that all of you, in the amount of resources that we have, are able to take in a lot of different viewpoints. A lot of people are looking at the current changing structure of the world, going from globalization to now deglobalization. And I know that a lot of you are really on top. I enjoy all the conversations. I enjoy whenever any good podcaster shared with me regarding that type of information. I'm always looking to learn, to grow, and to be stronger. Speaking of which, right, about 2 streams a day, yeah, I have every reason right now to just kind of put my feet up on the desk and do nothing. But that's not challenging. That's not going to make me a better person. That's not going to help me help those around me. And that's not going to help us change the world. For whatever reason, here I am looking to spread lots of love, help a lot of people not only be introduced to Bitcoin, which is fun and wonderful, because there's a massive amount of resources out there for you to continue your education. But the thing is, you could also get lost in down rabbit holes. You could also get confused. You could also get sidetracked. You need to have a plan. You need to have a well thought out, structured plan and be able to execute to where you're going. For some people, that might be over the next 10 years, I'm accumulating Bitcoin. By the way, big shout out to Headsnack, Conquer Trading and Investing theme song. He has been, over this whole bear market, taking his first Bitcoin position and accumulating. And for someone like him, who's not in the financial world at all, right? For him, it's been a monthly dollar cost averaging payment. Even when we said, hey, listen, now's not the time to dollar cost average. You want to build up dollar reserves. That was up until May. Bitcoin 25,500 on the Luna collapse. And then it was time to return to the bid. Yeah. But for Headsnack, just going ahead and monthly dollar cost averaging. And then as price came down into June, I was like, you know what? You might want to double up on your purchase if you can right now. And he's accumulated a third of a Bitcoin. And what's interesting about that is that the longer this bear market goes on, by the way, let's be very careful about having any type of opinions. I need to pull up a chart as we talk about these things. Just sorry, I didn't mean to go on a rant this morning, but we're ranting this morning and we're just talking about things. I'm gonna come over here and just pull up this chart over here. And the longer that this current bear market goes on, the more opportunity for a lot of people, unlike yourself, who don't have all of the time spent in the space, all of the knowledge and the head start, there's a lot of people who didn't have a Bitcoin position who have been building up Bitcoin positions. There are now a whole new segment as this adoption continues, and we are still in the early stages, assuming that of course adoption continues. Now, I don't know, and I think that the biggest mistake that you see out there right now is a lot of people having some type of ideas of what's going to happen through the rest of the year and next year in the markets. I personally think that's ludicrous. The market right now is data dependent. Like literally the market is hanging on all these high impact news events, whether it's job numbers, first Friday of the month, we're going to have non-farm payroll, whether it's CPI numbers, right? Everyone watching very closely whether or not year over year, month over month, if inflation's ticking up or down. Then you have FOMC. We have later this week, Thursday and Friday, out of Jackson Hole. We have all the central banksters meeting end of next month. That's the stuff that the market is literally paying attention to. And to be able to have or lock yourself into some type of idea of what you think is going to happen over the next, for me, myself, and I've said it for a while on our daily live streams, I can't develop a view beyond 30 to 90 days out. It's not even possible. The view that we did pick up on the turn over here was that, you know what, it looks like that we might be looking at a near-term peak of inflation, doing it in real time. Now, I know a lot of people on that top of that rally were then like putting that all together and talking about things like that. We like to do these things in real time, right? Has anything changed between then and now? No, we're data dependent. We're waiting for what the market does. One of the ways we do that, of course, is watching oil, right? Oil yesterday, you could see catching a little bit of a bid, right? By the way, did you see this headline? Oil spikes after the Saudi prince hints at a shift in OPEC strategy. Why? Because they're not liking, for a couple of things. They're not liking the disconnect between the physical market and the paper price of the futures of oil. Now, that right there, I think, in my opinion, it just shows you how manipulated markets are. This is a masterclass in manipulation on the price of oil being displayed. And I know there are a lot of people out there, let's call them macro analysts, who just can't figure out why the price of oil is in this massive, massive downtrend, right? And then like it spikes up yesterday on that Saudi news. Everyone is, oh, is it time to buy? It could be. It looks to me, by the way, very closely like we're looking at some type of descending wedge developing on oil. And this could spike up very quickly. Only the other thing that the Saudis don't like is that it looks like we might be seeing some type of resolution to the whole Iran nuclear situation. And it might be to get some of that Iranian oil back on the market. It seems to me that the master manipulators, let's just call them those from the US, are doing their best to go ahead and do what they do best, manipulate markets. And that's reflected over here, not in the physical market, but in the paper markets. Gotta pay attention to not what you believe or think should be happening, but what's happening. And you find that all being displayed on the charts. Rashid, great morning, right? Dollar cost average this morning. But Nate, in my humble opinion, it was time to dollar cost average May on the Luna collapse as price reached 25,500. And no matter how much further, how much longer, or how much lower we go, assuming that Bitcoin is able to go ahead and continue to do Bitcoin things, it's going to be a beautiful, beautiful opportunity out there. Now, other people, of course, have different objectives, but we're not getting into that right now. Did you see how quickly I pick up on my tone? Great. A lot of people, right? Maybe in Europe, there's the other line of thought that the United States is, through this deglobalization, is about to hit a new era over here as you see manufacturing returning to the mainland, right? As you see manufacturing returning back to the U.S., you all are aware of all the chip plants being built in the U.S., and it's a new world, and a new world is developing. There's no question about that. More importantly, you start seeing lots of foreign inflows coming into the United States right now, right? You're seeing a ton of foreign inflows coming into the United States. Is that being reflected in the dollar? I don't know. Like the dollar is the new hottest fad right now. And I saw some, let's say, misinformed post this morning regarding the dollar and the amount of liquidity out there. You could check the Twitter. In the description is my Twitter below. You could just go to my latest replies. When I say right now, what we're seeing is for sure the euro getting like smacked. Here we go, the euro under parity right now, and it's been in this massive, massive downtrend. And this is because they are energy deficient, right? They've locked themselves into a corner, a cold corner, sanctioning Russia and their lifeline. And it's not just the Eurozone who is energy deficient. It's also the Japanese yen, and also the rising yields in the U.S. have put a lot of pressure on the Bank of Japan to go ahead and defend their yield. They've been a massive printing of Japanese yen to go ahead and defend that peg. And then this is the two biggest makeup of the DXY. Euro accounting for 57% of it. Next biggest factor is the Japanese yen. So what we're really looking at over here is a weak euro and a weak yen. When I go back to my Mexican peso over here, the peso's kind of strong versus the dollar, right? Let me pull up a bigger even chart so you can see. This is over here. This was a shortage of dollars. This is the dollar milkshake playing out in massive form. And then you saw the Federal Reserve open up direct swamp lines to central banks across the world to make sure that they had access to dollars. I'm not seeing any type of milkshake play out. I know it's confusing for a lot of people because, it's just not really be called as it is. But anyway, that's not really going to help us get to where we want to get to. Let's take a look at some markets over here, see what's going on this morning. We'll start with price, and we see that really the equity markets are flat this morning, right? Even the DX, everything is flat. It's like the calm before the storm. And it does seem to me that a potential storm is brewing. Now, that storm, and look, I just want you all to know right now, if you're looking for someone to tell you when to buy, when to sell, where price is going, by what date, I cannot do that. I don't have a crystal ball. There's no way I could help you there, right? And I think that if that's what you're looking for, I think you should take your ball and go home. I don't think that you will ever be successful in the markets. What I'm here to do is share with you over time how you could best learn to maneuver in the markets, how you could best learn to make informed decisions, your own decisions, think for yourself, learn to properly analyze not only the macro, but also beautiful technical analysis, and then most importantly, risk management, and learn how you can make money in the markets. And often that requires a lot of patience. We've often talked about, we're going to be talking about it again, the analogy of the surfer who's waiting in the wake, looking and waiting, watching the horizon, waiting for a set of waves to come in. And an experienced surfer, as soon as the waves start coming in, doesn't necessarily jump on the first wave unless he's in a contest and his time's clicking down. What he's doing is looking for what he discerns to be the best wave to ride. And it might be the first one out of the set, or it might be the seventh, but he's waiting and watching to pick that wave. That's what you need to do. A lot of people are often in a rush to go ahead and lose money. You want to do the opposite. You want to make the idea of being a predator. Predators wait, they watch, they line up their prey, and then they attack. That's what you want to do. Right now, we're looking at a flat market, right? Oil's on the move this morning. There's no question about that, but that's counter trend. We'll start looking across markets. We'll see what is potentially offering the best setups, and then we'll start making a list, and then we will continue to watch them. Boom, 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 boom. Now, sorry, brother. And I apologize to anyone at any time, not only if I get your name wrong, but also just any type of pronunciation. So just ahead of time, apologies. CTM 2.0 or CTM is in no way, shape, or form any type of buy and sell signal service. I could do that. I could keep it all to myself, right? And go home. I could make it a buy and sell signal service, not giving anyone privy to how all this beautiful, like I could say beautiful, it's absolutely beautiful, how this beauty is architected. But here's the thing. By me opening up and me sharing everything with the community has been able to go ahead and then make that infinitely better. And that's how CTM works. It's all about the hive mind. What I presented to everyone was absolutely fantastic and an elegant solution in order to go ahead and conquer the markets. What we have done together as a group is just infinitely better and really infinitely. And it's not that I mean, granted that you could just set up buy and sell alerts better. You could just set up auto trading. But yeah, it's you learn exactly what's being done, why it's being done, and how it's being done. And then you get to use that CTM ability of critical thinking to decide exactly how you wish to go ahead and execute in the markets, whether or not that is Bitcoin, whether or not that's Ethereum, whether or not that's Cardano, whether or not that's across a host of all coins. Now, it doesn't even have to be on crypto. Now, I personally see the greatest alpha in the cryptocurrency markets. I personally like to execute on Bitcoin and Ethereum because they are the two biggest market participants. And when you have a solution that is able to go ahead and meet and exceed any goals that you have envisioned for yourself in the markets, it's not a question of continuing. I mean, the one problem is that because of what we've done, there's many different opportunities. And you could like decide that you want to execute but what's more important is having the well-developed strategy and plan in place and then executing off of that in time so that instead of running around, right? I mean, look, I didn't mean to deviate, but here we are, on Ethereum alone, and I'm going to use Ethereum because it's outperforming. Ethereum since January 1st, 2022. I mean, it's up 230%, and with a 12% drawdown. It's insane. Bitcoin's not putting up those numbers. Bitcoin's only up 25%. Sorry, that's 24%, and it's also showing right now for this year a 23% drawdown. Granted, it's holding an open position of 8%. Right. So Cardano, beautiful. Cardano is obviously something that has a bigger drawdown, but also bigger return on the upside. You don't need to be moving around and looking for what you think is like the hottest altcoin or anything like that. I don't know what your ideas of what you started for in the markets or what you wanted to achieve. I do know that someone like Stanley Druckenmiller, the legend of legends, right, has had a 30% return for over 30 years. Yeah. And of course, we're not including something like something very important over here as taxes. Right. I'm going to go with zero deposits. Right. And this is over here over time. Time is the one thing that you can't replace. You need to be patient in order to have time. Now, the only other thing you can do is to replace time is have a bigger rate of return, a 30% return. To do that year over year, that's considered to be the top of the top, the best of the best. And it is. There's no question about that. Now, if you're able to go ahead, I'm bringing up a screen brush over here. Hold on one second. Let me enter ghost mode and just make sure that I could, boom, draw with you. Now, you can't replace time, and I know that a lot of you, a 30-year plan is not really something that's attractive to you. You have to know thyself, right? And for those that are, and most people, by the way, if you're able to put up like in the regular public markets, a 7 or an 8% yearly return, that's considered to be really good. Obviously, right now, people that are just buying, holding, a lot of people in the U.S. in the Roth IRAs, they've seen a significant amount of their, let's say, their accounts really fall. And if you continue making that 8% a year, they sent themselves back many years. Now, we have simple solutions to avoid that. So, like when I talk about simple, I'm talking about those that are trading in the equity markets. You know, if you're pulling up something like here on the daily, you're looking at the NASDAQ, and then, well, you know where to get on the sidelines, you know, where, and stay on the sidelines. It's a lot better keeping your buying power static and or neutral in something like a retirement account until momentum returns and you get back in the market. Yeah, you don't set yourself back in time. Now, the other thing that you could do aside from, you know, time, and again, 30% return year over year, I know that a lot of people during the euphoria portion of a bull market running, they get very overconfident and they believe that they're capable than more than they're capable of, right? That is a little bit of luck. It's a lot of bad money management. It's a lot of bad inexperience. And then they find out really quick that that's not the situation. That really they need to go back to square one and learn what they're doing and why they're doing it. Yeah, maybe if everyone was a little less, let's say, I'm talking about Twitter. I think it's just the way the platform's designed in order to encourage that engagement. It's almost like you are encouraged to have like snarky replies. If you find yourself with the urge to do that, don't send the tweet. Like that's a really great exercise in self-control. Anytime that you're out there having a conversation with someone and you're not adding to that conversation by sharing your point of view, whether it agrees with it or is opposed to it, but if you're doing it in a way that fosters any type of like tension, then don't send that tweet, you know? And you will train yourself in a very short amount of time over a period of few weeks, 21 days, in order to actually use the platform a lot different. And you'll find that your interactions are a lot more useful and a lot healthier. Again, CTM is about a lot more than just being able to know when to be in the market, when to be out of the market, and on what side. Now, that's the most important. The other thing you can do over here, and we try to view this after taxes, right? 70% after taxes. What are you talking about, Jordan? Well, I just showed you we're 8 months into the year. Ethereum's up 230%. You don't think that's a realistic goal? I don't think anything special is going on in the markets. I mean, I shouldn't say that. The markets have offered massive opportunity early in the year on the downside, right? On the downside, there's been massive. Where's that peak in November? Here we are. Markets have opened up massive opportunity on the downside, but also now on the upside. So it's a good trader's year. It's not a good year for like, I'm just buying Bitcoin and I expect I'm going to be rich, but it's a great year for trading. There's no question about that. By the way, we also have really important solutions on things like that's micro futures. That's going to be on GBTC, right? And could you imagine off the top being out of the market? You have GBTC in your 401k, you're out of the market. Right? Okay, over here in April, it looks like momentum's returning. For one day, you take a small opportunity, doesn't work out, you're out of the market, and continue to be out of the market. That right there alone is absolutely priceless. But it's not a signal service or anything like that or anything that I do. We're not here to just, what we do is teach people how to maneuver in the markets, and that's what we do. So I don't know. I don't know where that came from, but that's where we are. Hive Mind. It's the Hive Mind absolutely outstanding. So the greatest love and respect to all of you. And it's just a beautiful team to be working on. I consider myself extraordinarily blessed. I think it's way too soon to be calling anything like a double top on the DXY. And for sure it could be. Look, it could be. But right now, we want to trade with momentum, right? And the momentum is to the upside. I think it's really well visualized like this. The momentum is just clearly and strongly to the upside. I was talking about John Rotten 31, and that could be the very top. Like, there's no question about that. That could be a double top, and we could start seeing, against everyone's proper belief, a massive decline in the dollar. I talked about, though, like, for the wrong reasons, kind of showing off and, you know, pointing out this double black diamond sell impulse over here why everyone was talking about this going to 120, and that worked out great. But because I didn't get the proper trade. The proper trade is in an uptrend. You look for price to come back down into support, and you're looking then for a resumption off the support back towards the trend. You'll go much further by using basics. And basics, I mean, you're looking to buy in uptrends, you're looking to sell in downtrends, you're looking to buy off of support in uptrends, and you're looking to sell off resistance in downtrends. And Johnny Rotten, you might be calling the double top there for real. It could happen, right? I think that's largely going to be dependent on, well, let's see what Mr. Powell does or communicates on Friday. At the same time, that could be detrimental. Why would Powell affect the dollar? Oh, well, let's see. Right now we see yields rising, right? Yields back above 3%. Markets beginning to say, you know what? Actually, those hawks, that all that verbal intervention we've seen over the last week, they're probably serious when they say that they're just going to keep hiking and that they want to front load these rate hikes, and that probably the neutral rate might be closer to 4%. So right now you're seeing the dollar bid on that. Now that could change, and it could change quickly if all of a sudden Powell's like, no, that's not correct. The markets have been, my Fed speakers have done their job over the past week, and all those market conditions that loosened up ever since my press conference, they've retightened. So I'm not looking to actually destroy the markets, contrary to popular belief. Because if I destroy the markets, all that means is that I need to go in there and clean it up. And the only way I could do that is by printing more money and purchasing more assets. And that didn't really work out so well the first time. I don't really want to do that. So I'm not really going to go ahead and shoot myself in the foot. But I want the market to think I am. I want to use my best and most effective tool, and that is that keeping people guessing and that verbal intervention. Boom, 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 boom. Yeah. We've seen the largest moves on Bitcoin, those blow off tops happen when the dollar's coming off. But we've also seen, there's no question about that, some really strong moves occur on Bitcoin. Some of the strongest run-ups occur as the dollar strengthening. So I'm not really sure about, Bitcoin inverse to the DXY and how small the market cap was at the time and how much it was affected. But I could say that a strong dollar is definitely a drag on Bitcoin. We've seen periods of gold rising with a strong dollar. We've seen periods of Bitcoin rising with a strong dollar. We've seen periods of equity markets rising with the strong dollar. It's part of the dollar milkshake theory. Part of the dollar milkshake theory is the stronger the dollar gets, the more inflows you will see into the U.S. equity markets, and therefore seeing the stock market to rise. So there, Brent Johnson, the let's say, I'm going to say author of the dollar milkshake theory, he believes there will be a point in time where you see a rising strong stock market because of that strong dollar. I tried to kind of be a little fluid, right? I could pull up right now just the chart of Bitcoin over here, right? And I could show you coming to a 3-day to give us a little bit more time like this, right? And so what is this? This is the dollar pretty strong over here. 96 on the dollar historically is strong. And not only that, it's continuing to rise in this area. Bitcoin in that period of time went off. I mean, it's a strong dollar. What about over here, Jordan? This is dollar milkshake theory. Everything got destroyed. That was the dollar wrecking ball in full effect. I think this has more to do with rates than with the dollar. And what you're looking over here as the Fed began their rate raising cycle over here, that put a lot of pressure onto the markets, and Bitcoin was not immune. Bitcoin actually got destroyed by that. And then you could go back over here again when the Fed was again raising rates throughout 2018. That really that's what sent the dollar down. and then the Bitcoin, I'm sorry, that's what said Bitcoin down, and then Bitcoin bottomed when they paused that rate hikes. So I think rather than, and by the way, the dollar's rising over here. So the dollar's back at 97, right? And Bitcoin, why the dollar stays strong from 97, all the, I guess same and staying 97, 98. I think it's the rate hikes that have more of effect than the dollar. But I know we'll keep it simple. A lot of people like to just kind of like keep it simple. Thank you, my brother. Wolf Skull. That I appreciate that very much. I know a lot of people in CPM don't really actually even want more people to come, only because it's kind of like, do we want to share this? So that's beautiful of you, Wolf Skull, and lots of love to you all for sure. And James, I think it's more complicated than what I'm presenting to you over here. So I'm going to go back to what you said, and this is for sure, right? Anytime we've seen the largest moves occur on Bitcoin to the upside is when the dollar's coming off. So that is something that would be welcomed by all of us, to start seeing the dollar come off. Hey, James, you could even see it just today on a very small time scale, and it's hard to make any type of correlations on such a small time frame. But look, the dollar's coming off, and Bitcoin is bid today. So I'm going to affirm what you're saying, but at the same time, just say, I believe it's a lot more nuanced than that, but we don't need to get into those nuances today. I'm just actually glad to be here with you all, and everything will happen in its time and in its place. Yeah. So let's take a look at what the euro's doing this morning. Let me jump over and jump down and take a look at what the euro's doing off those numbers. And so the euro's making a run back at parity. And I think that most important over here, it remains in a very strong downtrend. Again, there's every reason right now for people to be betting against the Eurozone, unless something significant happens. Something significant, in my view, would be them finding some solution to their energy problems. Now, that solution, most like the easiest way that solution is going to come, it would be if like some type of arrangement was made with Russia, right? And I think at this point in time, that would involve the Europeans saying, okay, we're going to pay for energy in rubles. Again, some of you all are absolutely, your macro knowledge, your geopolitical knowledge is intense, is incredible. If anyone has any other ideas, right? Jose pointed out to me like the idea of building a pipeline. Well, that's going to take a few years. So that's not really going to work. I know we have some of France knocking on Yemen's door, asking them for their natural gas, but that's like band-aids on gushing wounds. I think that, again, it's probably going to be the continued place to act. And here we go off of those PMI numbers. Again, the German PMI wasn't at manufacturing PMI was above forecast, but it is under 50, and under 50 is deteriorating. It's bad. Thank you, my brother. I didn't even really read exactly what you said. Yeah. So let me take a second. Thank you for letting me know that the help that I've contributed to everything that you've done. And I fully, as everyone knows, I attribute it all to you. You are the one putting the work in each and every day. You have the opportunity as the same opportunity as the person standing next to you, right? But you're the one actually putting the work in. You're the one looking to improve upon yourself, and all the credit goes to you. It's going to be long and painful decoupling. I don't know, Salamando bringing up the US dollar, Mexican peso, and versus the euro, right? This seems to me and continues to be the trade. Yeah. And it looks beautiful, and it's amazing. Yeah, it's great to be here. It's wonderful. Daniel, it's going to take probably a few weeks, in order to get back into that old school flow. And I'm just kind of this morning having a chat with all of you. By the way, the markets, right? We have what I deem to be, what market participants deem to be a high impact news event ahead. And that's this weekend, the end of the week, Thursday and Friday in Jackson Hole, Wyoming. And the thing is, the Fed gets the opportunity to communicate to the market what it wants to communicate, and that could go either way. If Jay Powell comes out there and kind of affirms that he misspoke about, being at the neutral rate, you're going to see this momentum on the sell side ignite. That could be a catalyst that could take markets and send them right back and quickly towards the lows, right? Right now, I want to pull up this chart over here. We got to talk about this one over here. So we need to reframe a little bit, right? We've had a technical breakdown. First, we had a technical breakout. This is CPI, sent the market to the breakout of this descending channel. You had a breakout, a retest, and then a resumption off. That right there is beautiful, showing and confirming the breakout occurring. And then since then, we've had a retest again. This is all the Fed speak, saying, wait, maybe we got a little bit ahead of each other, of ourselves. This is a lot of people. I would call it the smart money, saying, well, that bounce was quite significant. We're coming into the 200-day moving average. I'm going to go ahead and take an opportunity at the market. That's smart money, right? Dumb money was selling the whole way up. That's for sure, right? Unless that's your plan, and unless you're managing your risk well, then you're absolutely smart money. And you're probably just, your timing was a little bit off, but all of our timing is off at times, and we need to really improve upon that. That's one of the main things that we set out to do over these past 3 to 6 months, was make sure that it's not a question of getting it right. You could get the direction of the market correct, but the timing in between means everything. And that timing in between is very crucial and very important. A lot of people expect straight up, straight down. It's not always that way. Either which way, we had then a retest of that channel, that broken resistance, held as support. We were looking for it to be support again, and it broke down, and then it broke through. That's that yellow line. That yellow line was confirming a breakdown in the markets, and we had a technical breakdown. And then right now, all that's happening is that you had the breakdown. We're retesting it. You see that price came right into where that yellow line was after the breakdown. Now, I personally, this is my own opinion, my own bias, I don't see a major move happening one way or the other before Friday, right? So Monday is going to be a big day. Tuesday is going to be a big day. Friday's trading session, because I believe it's 10 a.m. Eastern time, is when Powell's expected to release his speech. So Friday could be a big day. But what I'm getting at over here, I was looking at this as I was talking, and if I just went ahead and I take that line, and then you see over here that channel? Do you see how the market is paying attention to that right there? The structure of the market. Nevertheless, that's a breakdown. If anyone tried to go ahead and, take a long off the descending wedge breakout, it's very late, right? And we had trend line breaks down here, right? All the way down over here. This is early, and this is able to manage a risk to the upside. This is, on a technical breakdown, time to take profits and get out and get aside. Right? I don't know how far the sellers are going to be able to push up until this weekend. I would imagine that price holds this low and stays under this high until Friday. Now, if something changes, it's not very far between that low and over here, and price rolls over, well, then that's obviously wrong. That's how you manage risk. No one's buying off of this because we had a technical breakdown. Below the CPI print, below that yellow line in the sand, that was a technical breakdown. So right now, you're just neutral, you're waiting, right? And you're waiting for what? Well, you're waiting to see whether or not we continue to sell off over here, to reverse and break down. I would get behind that momentum if I had reason to be, and that reason coming from Fed Chairman Powell himself saying, nope, we plan on tightening further, and very clear about that. And I think that it would still be early enough as for a test of the yearly low, right? Whether you break it or not, to put in a nice trade to the downside with momentum behind you and with the proper, let's call it, communication from the Fed behind you. Now, I think if you're selling, or if you already took a sell position and you're riding this current trade, it's too soon to give up on it, right? And I think it's very simple, right? You have a very nice place right at the top of that last move to manage your risk off. As long as price is below it, you could give it room to see whether or not you're able to wind up getting your objective. And your objective is testing the low and then breaking down for another leg below. And depending on what's happening, a lot of people are also a little bit deterministic that the markets will put in one more leg down and then it's up to infinity. And no, I mean, it's not like that. Yeah, it could be many more legs down for a long time. There's where we are. So this is a really good area over here, though. If you are bearish on the markets and price is able to actually trade back above that, at that point, you might want to say, I continue over the intermediate term to be bearish on the markets, but actually that's not what's being seen right now. And I might do a little bit better by taking a neutral posture and waiting for there to be money on the other side of the room, and then go over there and pick it up. All right. If you don't have patience, you're not going to make it. Let's take a look at what's going on over here. I didn't even check out this morning what's going on with Bitcoin, what's going on with Ethereum. Currently holding positions on each right now, about 5-6% in profit, and on the short side, right? Those trades continue to hold. On Ethereum, same exact thing over there. And it's just a dance. It's the beautiful thing about participating in both Bitcoin and Ethereum is that together they're able to, pick up different trades at different times. For example, this buy trade on Ethereum, this triggered why Bitcoin was still short. Bitcoin was in a short position at that point over here. And before it exited, it was in profit and then wound up not. Before it exited, Ethereum over to take the long, and that long trade over here continued going up. And before Ethereum took the short trade, Bitcoin was able to put on a short trade first. And you notice that Bitcoin was actually consolidating, lagging behind. And sure enough, as it's lagging, it offered up the opportunity to get short ahead of time and early. The two of them together, it just puts up a wonderful, wonderful dance. Now, again, one of the things that we're toying with and figuring out if it makes for a better overall portfolio allocation is adding Cardano into that mix. And Cardano, like you could even see right now, it is holding an open position a little bit more in profit, right? I would say so far, why if you go back a year and a half, Cardano puts up epic returns. So far in 2022, it's been more of, let's say, bigger drawdown. Portfolio allocation would have to make up a smaller portion compared to Bitcoin and Ethereum. Nevertheless, we're always very methodical about moving forward, of exploring many different variations. We call it like scouts out there experimenting. But we're very, thoughtful as far as making any type of changes. Very slow about it, actually. We only want to do that when we see or are convinced that it is a long-term improvement. And that comes off of having a well-developed plan in place, that there's no type of pressure to do things. We don't need to move fast and break things, right? We can move slow and capitalize. Bitcoin, yeah, I mean, so Andrew, look, I've seen it many times. There are people who put out predictions like this on both sides all the time, and some of them are going to be right? Someone could say, Bitcoin's going to make a new all-time high in 2023 before the next halving. And everyone out there could be like, yeah, under this macro environment, that's ridiculous. And then it could happen. And then they'll be like, I told you on that live stream that was going to happen. You did. I didn't pay any attention. Why? I mean, and then you could have someone saying by November, Bitcoin's going to trade down to 12,000 and Ethereum 650. Andrew, you could be dead on, but why? Why would you say such a thing? And don't tell me it's because of the macro. Don't tell me because the Fed is tightening because of inflation. We don't know that. You know, we here in real time were able to talk about coming off in June that, look, we need to watch the prices of commodities. We need to watch the prices of specifically of crude. We're watching food-related commodities come off 20, 30%. That says to us that, you know, this print over here that happened in July when it came in at 9.1, that's probably the hottest print for the near term, right? That says to me that the Fed might actually have some, reasoning to come off the pedal over here. And sure enough, then we started seeing oil come off. We started seeing the next CPI come down from 9.1 to 8.5. Where do you think September's CPI is going to come in? Above 8.5% or below it? It seems to me a lagging indicator. We've seen all of these high influencers of inflation month over month coming off, that it's going to be lower, right? And then when it comes off lower, the market right now, is it priced for last I checked, it was into last week, it was 60% of a 75 basis point hike in September. Do you think it's going to be above or below 60% chance if we see a CPI print come in lower than 8.5%? It's going to be lower. And then the market was not priced appropriately. And then now Chairman Powell has two CPI prints before the September FOMC meeting coming off. You know, you're seeing a change from higher rate hikes, 75 basis points, 75 basis points, and now you're moving downwards, right? That's not a pivot. A pivot is when the Fed pauses rate hikes, but it is a change in trajectory, and therefore the market has to reprice itself. Now, it works the other way also. If we start seeing the yesterday off of the Saudis not happy about what the paper price, the futures are trading of WTI crude, and then all of a sudden at the next OPEC meeting, they come in and they're like, you know what, we're ramping down production. I don't care that President Biden flew all the way here to the kingdom to come here after he called me a stone cold killer and give me a fist bump. I'm bringing down production. And then you might see actually finally oil break out of this descending wedge, and it might start shooting upwards, right? Now, off of yesterday's comment, it's too soon for me to make that assumption, right? But Jordan, we have a trend line break. Yep, we do. But we determined, and you also had a trend line break coming in just a week before, but we're not looking for trend line breaks in this instant. We're preventing ourselves from getting, let's say, chopped up. But if I start seeing oil getting back above 105, that would be a huge level to get back above, right? More importantly, even it's 106 or 107. And then all of a sudden it's back up towards the yearly highs. At that point, not just myself, right? You'd be looking at the Federal Reserve and they're saying, yeah, we're seeing the price of crude come off near time, and that's contributing to lower month over month inflation. But if that were to reverse, the reverse would be in effect. And that would mean that as the market had been over the past couple of months repricing in inflation coming off, the market would be priced wrongly. And that you would then see the Fed have to go ahead and, instead of like bringing down rate hikes 75 to 50, maybe even 25 basis points, will start have to attacking and raising them even higher. And then you could see a massive move in the equity markets. Then you could see wherever price is come September, October, November, then you would see, and it could be into 2023, I imagine through the midterms, this manipulation is going to continue. I mean, that's my bias. I'm going to, like I said, trade what's happening. And that could mean even after Friday saying, oh, now we got momentum to the downside. Let's line up a trade and make sure that you're able to participate in it. But just be like, why are you picking November as when the low could be? Because looking at the macro, and I could look at the macro, I did that back in October when I mentioned to everyone, hey, looking at the macro, it looks like the Federal Reserve was just crystal clear that they're going to be tapering. You can't taper a Ponzi. And then they're going to be potentially raising rates. And Bitcoin is not going to be immune to that. And here we are. And then at that time, people didn't want to hear that. And then same thing at this point over here, where we're like, well, the macro could change rapidly, and the macro's changing, and we got in front of it. But between here and here, nothing's changed, right? We're not seeing price of commodities rising yet. We're not seeing any type of, let's say, except for some verbal intervention, as is a like an important policy tool of the Federal Reserve. We haven't seen anything change. We're watching prices in real time. We're data dependent, and data dependent literally means what happens between now and next month and next quarter, like that will determine how we view the market. So I can't tell you where price is going to be 4 months from now. And I think that if you're doing that, well, there's a chance you're going to get really lucky, and then you could take a victory lap and you could be like, see, I told you. But why are you saying that? That doesn't seem to make sense. That's all. Boom, 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 boom. Fernando, what are your thoughts on a spot? Great. By the way, spot is all you need to trade in the markets. Buy side only on spot is how you should be for the majority of the people trading the markets. No question about that. Is it worth setting a trading range from 21 to 25? Fernando, I don't know. Like, Fernando, so I guess to answer this question, right, I would look at the markets and I would say, well, we're in this channel over here, yeah. And if you were starting any type of range tool, it might be better why price was in the range. We've broken down out of the range, right? Now, it doesn't mean that we won't like see price rise and then buy side trades start igniting again. But most of the time that you're in a range, right? Here's a range that sets up a big win. Most of the time you're in a range that sets up a big move. And, you know, I'm not a range trader, Fernando. I'm actually a swing trader who has determined that the crypto markets is, let's say, offers one of the greatest growth opportunities of our lifetime. We are at a very early stage of adoption. And as long as everyone could look around them and we could see the participants entering the market. BlackRock has just entered the market. I mean, Wall Street is here. We've seen adoption by countries. I mean, it seems to me that it's happening even quicker than a lot of us had believed it would. But my bet is going behind an asset class that's undergoing massive adoption. I happen to choose the two with the greatest network effects. Now, it's true, Cardano does have a strong community behind it. There's a lot of reasons to believe that Cardano could offer some really good trading opportunities, right? But Bitcoin and Ethereum, these are the leaders here, the largest market caps, and I do expect a lot of continued growth in there. So looking to develop a range-bound trading system in that type of market is actually, it's just, I'm not saying it can't work. I guess it could work okay, but I've decided to do the opposite. I've decided to create a momentum-based system that is able to go ahead and profit under, let's say, the conditions that I just described to you. So that's completely contrary to the way that I've decided to go ahead and approach this particular market and attack it. and the way that I trade it during any type of sideways price movement, including specifically over here. I mean, this is drawdown. This is drawdown on the downside and drawdown on the upside, both ways. Now, it did lead to a beautiful and wonderful on both Bitcoin and on Ethereum. Some really nice, huge trade. The trade on the upside was even bigger though, and that's where a lot of people get confused. There's massive opportunity on the downside, but there's more opportunity on the upside. So Fernando, those are my thoughts. I'm not saying it can't be done. It potentially could be done, but I'm not sure that you want to trade any type of range. And if you're saying grid range bound system, that's just kind of like doubling down. It's not my thing. I don't know. I guess there could be opportunity there. But if you're trading any type of range bound automated trading tool over, let's call it any like an 18-month period, you're not going to perform even in the same league as a momentum based system. That's my opinions from what I'm doing. I don't know, Adam. My TA 6 months ago was wrong. I mean, where though? I mean, look, I'm only a good sport about there's a lot I need to learn, and I can learn a lot from all of you and a lot from my mistakes. But Adam, I would love for you to let me know what exactly it was so that I could remember that with you as well as you do. Yeah, Mondo. I had this conversation a few weeks ago. I was in Bosnia and met someone also from Mexico who is working in Germany and newly married, newlywed young kid, let's say 26 years old. And we start talking about the crypto markets, and he put all his money, his life savings at that age. So regardless of, if someone only has $1,000, and they put 100% of it into crypto, that's 100% of their money. If someone else has 5 million and they do the same, I mean, it's all relative to what the individual's is. And for him, he put his life savings into Cardano and XRP. And so again, it depends on the conversation you have with someone, their overall knowledge of the space, of the financial markets. So for him, it's Bitcoin 101, and that's, look, you shouldn't be focusing on these altcoins. You should only be focusing on what offers, let's say, the sure shot, the greatest opportunity over the next 10 years to continue adoption, the one with the largest network effects. And I know Ethereum's network effects right now are growing even faster than Bitcoin. But because of that old and slow technology, that proven technology, like, the safer bet is Bitcoin, right? And you're still right now looking at something that is a $400 billion asset class, if it's even 400 billion right now, right? 350 billion, 400 billion. And if you're talking about like a milestone that you believe it could achieve is a $10 trillion market. I mean, go back a year ago, it was $1 trillion market, right? It's still, that was before you saw a lot of big market participants beginning to join in. And if you think that over the next whatever X amount of years, it has the potential to become a $10 trillion market cap, and you're talking about over 20x, well, you should probably be going with what you deem to be the highest probability of achieving that. And you should just be dollar cost averaging regardless of where price is. And we've talked about that basic formula, Crypto 101, right? $250 a month, $3,000 a year, and then look to go ahead. And now we've been able to make sure and assure through just a few trades a year using something extraordinarily simple that you hit that goal of 70% compounded annual growth rate, right? And when I say make sure, I mean, it's the markets, nothing's assured, anything can happen, but it puts you way ahead. It seemed, it seems to put you way ahead. And, that's probably putting your money into XRP and not understanding, and I'm sure he doesn't understand that the company's Ripple's business model is to have this token XRP that they sell to retail to fund their operations. He does. There was a time when people thought that or argued that XRP was decentralized, and to run a node, you needed permission from the company to run a node. I mean, so again, it's just that market education. I think that a lot of us have failed in kind of being out there and educating those around us, and that included because when you bring these or have these conversations up with a lot of people who are very emotional, it becomes, instead of like a constructive conversation, it becomes more of like attacks. So it's almost like, well, I just don't want to even swim in that pond or deal with that. But then I look out there and I see this like these good people who are starting young families and they're putting their life savings into something so risky. Well, maybe we need to do a better job of being out there and educating each other. So I've looked into XRP extensively, and I don't see it. It's not something that I wish to participate in. I think I did a good job in warning people before the SEC came down upon them. If you're looking to trade and you're a trader and you understand the risks involved and you have really good and strong money management, I don't honestly care what you trade, right? At all. But at the same time, for me, myself, it's a lot easier to execute on Ethereum, on Bitcoin, and rather than looking for what alt is going to make its next move. By the way, this is looking at, Ethereum over here, and at its height had a 69% gain, open profit, and took a 52% gain out of the market. But if you were looking at Ethereum Classic, it put in a gain about 75% greater. And I didn't know ahead of time, or I don't have the capacity to be able to factor in everything. I couldn't say, well, maybe there's a little bit of oomph, a little bit of hype because of the merge, and that's debatable, whether or not this was just Ethereum outperforming on a risk-on move, because as risk has come off, or as this next down move has started, Ethereum is coming right with it. But I could have, I guess, been like, well, for whatever reasons, I think that Ethereum Classic might be the better play here because of just the possibility that proof of stake is not the way to go, and that people wish to go ahead and actually revert back to proof of work, whatever. I could have speculated on Ethereum Classic and it would have been a better trade. And that's the thing with alts. The alts have these massive moves. And if at any point in time we work on it, if at any point in time I'm able to determine like why I should be speculating on whatever alt at whatever time, I'm all about it. Only that's a lot harder to do than it is to execute off of something like on Bitcoin and Ethereum and do that methodically. Fernando, this is a proprietary indicator for Ethereum here that you're looking at right now. This is not on TradingView. This is not shared or anything like that. So it's and I say this as someone like totally not immune to it all. It is Justin, that brings up Ethereum and Bitcoin, and I just wanted to take a look at it with you all this morning. So let's jump over to there. I thought it had it pulled up on the screen. I don't have it up on the screen this morning, so I'm not going to go through all my windows and tabs with you right now. Any which way, what else is going on here this morning? 194 people in this room here on this Tuesday morning. Thanks for being here. I'm looking forward over the time ahead to sharing a lot with you. But here's the thing. I'm a student of the market. And it has to be what the market is showing us and giving us. And right now I'm letting my bias get in the way. So let me go ahead and fix that. What's my bias? My bias is that the markets are going to be a little bit, let's say, range bound. I pointed out that range to you a little bit earlier. And like if I had to pick where I think the markets are going to be between now and on let's say Thursday evening, it's going to be somewhere in here. And that's not necessarily the case. I can't just for the next few days, and I'm not. Obviously, you all know that I'm executing off of CTM 2.0, right? We're holding right now short positions. We're short the market. And whether or not, even though Bitcoin and Ethereum are up this morning, those shorts are still well into profit. And what happens between now and the exit, I have no idea. We'll wait and we'll watch and we'll see. Again, I'm a momentum based trader. Right now, the momentum is to the downside, but there could be opportunity out there. Let's give a little bit of a look. Fabio, what's going on? Thoughts on the metals, macro, technically. So let's take a look briefly. That's what I wanted to do with you all today. It looks like it's going to be tomorrow. Is go through the markets. When I say markets, I'm talking about first the indexes. I always like looking at the dollar index to get my bearings of the overall market, as well as the 10-year to look at oil, right? Gold and Forex, and go over them with you and start together taking a look at where we see things and what potential setups are developing. That was my intention for today. And then I started off talking and talking about the macro, and then talking about whatever it was, everything has its own time and its own place. But during these public live streams, as we begin to spend time together each and every day, what it's going to be is really a good portion of that is going to be spent just straight going over the charts and making sure that type of education is able to be imparted on you. That's really important. Silver Johnson, right now, I mean, the only place to get the indicator is through working with CTM. You could go to there's no link in the description. You could just go to conquertrades.com and join us. Now, that opportunity is legitimately about to be adjusted and changed. And in order to work with myself and CTM and myself on team is going to be made, let's say, a little bit less or a lot less accessible. And the reason for that is just that I'm completely happy. Not content. I mean, how do you say in Spanish? We would say llena, like full. I'm so happy with the environment that I have fostered, created, developed, and everyone that's working together on team and how we work together, that I don't really want to change that, right? So as soon as I finish updating like the back end, that is all changing. Right now it exists, but I can't tell you a time frame of how much longer. I imagine it's somewhere around a week, but I thought by now that would have been changed. And anyway, I'm not in a rush for that. And I guess Silver Johnson, if I wanted to, I could put together a nice video proposition of a showing why and the value of what's being offered and what we do. I'm not really doing that either. I'm not interested in that. I'm just very happy, and I'm here to kind of do a different thing this year on the public side of YouTube. And that's the environment I'm looking forward to working within on that type of aspect. So and that's it. So, but I am going to leave this short now, not so short. We've been on for almost an hour, but I'm going to leave this short instead of going over the charts. And that's only because of really what we're looking at is that last move or the meat of whatever move we're in. Either the opportunity for a new entry is not there right now. And I know that. So instead of taking our time and beginning today, we're just going to wait for tomorrow to do that. And then we'll start getting a lot more lining up and getting into that groove, getting our pulse across markets, waiting and finding and beginning to go ahead as we used to, like check off like what's showing potential opportunity for a trade. And then as those trades develop, we'll make sure that we set up the entries for everyone. Most importantly, we talk about where you're setting your risk on that trade, where the stop loss going, how you set your position side accordingly, and then how that trade is managed. And we'll do all that together in real time across markets. So before I get off, though, I want to make sure I didn't miss anything. So let me play a little bit of music over here. Krunk, by the way, out of curiosity, do you know where the term maxi came from? Right? It's kind of interesting. Who here? I don't know how long people have been in the space. Probably most people don't know. So if anyone knows where the term Bitcoin maxi came from, could you? Master, no way. El Jefe, that's kind of funny though, for sure, right? And that's the truth. The Money Masters, El Jefe. If you haven't watched the documentary, The Money Masters, that's a good one. SAS, crypto. Does anyone else know where it came from? Jeff, thanks, brother. Look, wow. Greetings, friend. Does anyone know? No. So the term Bitcoin maxi or maxi came from it was like an attack against Bitcoin, and it came from its competitor. It came from Vitalik, right? And what he did was if you can't so anyway, he did the same thing last week. Did anyone notice that tweet he put out? And instead of talking and discussing and putting out any type of fruitful arguments, discussions, and or solutions as this massive move to proof of stake is underway, he put out that the new maxi, he calls them now mountain men, right? And that's a huge sign of weakness. You have to think about that. I don't really care which horse you're betting on, right? I'm personally here to make money in the markets, and why I think that in the long run that Bitcoin is going to offer the best avenue to do that. Well, I think it's it's a lot better for me to be trading Ethereum to stack sats. I'm all about Ethereum, and at the same time, I guess what I'm getting at is if at any point in time the proposition for Bitcoin changed, I'm not tied to Bitcoin in any way, shape, or form. And I don't think anyone should be. I think that's a mistake. I think that you always want to be assessing the market and the information presented, and you want to be ready at any point in time to pivot to what's best rather than getting locked into something just out of this emotional tie to it. So that's something that's said for myself and for all of you. Don't pick teams. Be on your own team and make your goal to go ahead and conquer the markets and meet all the objectives you ever set out to do and achieve through the capital markets, right? And it's thought out. Let's keep an eye on it that if the move to proof of stake is successful, that there's going to be a massive attack against Bitcoin. And that attack is going to be talking about its energy usage and consumption. And, so watch out for that. You're obviously the people behind the project are used to these type of attacks. Again, maxi, mountain men. Don't fall into those traps though. Don't be out there and try to size someone up by which project they're involved in. Because again, that kid that I was speaking to who put all his money into Cardano and XRP and is now down miserably. I mean, who knows what he's doing tomorrow? I'm not going to look down upon him for doing that. Instead, I'm going to try to build him up, to engage in conversation with him and try to help him. And who knows what he's going to build tomorrow. And the same thing, rather than oh, you're a maxi. That's nonsense. We don't do that. That's not right. Right? All you're doing is falling into someone else's trap. Understand where that term came from before you even use it and why you're using it. All right. So everyone, thanks for being here today. Thanks for Mr. Kaiser. I mean, no, it came from Vitalik and Max too, right? Max, I remember this is in 2019, a tweet, and he's like, all coins are gonna melt into nothing against Bitcoin, and I was like, no, you're so wrong. Are you kidding? All coins and are gonna have a massive alt season coming up, and Ethereum's gonna outperform Bitcoin in the next bull market. No. I don't. Again, it's just different sides, different tides, and a lot of them will say, well, I'm trying to protect people, and the reason why I am taking up this toxic posture. Well, if you were trying to protect people, then why didn't you tell them that Ethereum's going to outperform next cycle? Because maybe they could have built up a larger size account in order to go ahead and stack more Bitcoin. It's not protecting people when you dissuade people from what potentially is the right investment. So you got to just be open to everything. All right. Build everyone up, be open to everything, and do our best to stay on the right side of the markets. That's all. Everyone, have a beautiful day. I look forward to seeing you all again tomorrow. I'm going. I'll see you all then. God bless you. All right, everyone. I'll see you later.